Forget about $102,000 because the biggest banks in the world are now accelerating their silent Bitcoin takeover. So this here is the chart of the Bitcoin price. Everybody's been worried about it correcting recently down to $102,000. But not only Jamie Dimon, we can see his bank, JP Morgan, just increased its Bitcoin exposure by over 60% while dumping Ethereum. But we also have another massive bank quietly increasing its Bitcoin exposure this week, which I think asks us the question. A lot of people are guessing and they're questioning, is the 4-year Bitcoin cycle dead? And if it is, why are the banks right now silently buying Bitcoin? Why is Donald Trump putting out $2,000 stimmy check bonuses? And we've even got Trump coming out this week talking about 50-year mortgages. We've got some conflicting information that we're going to be talking about today. Chris, I'd love your thoughts on all of this and where you want to start today's deep dive.
I think, well, I guess I'll start with the stimmy checks from Trump. So how's it going, Luke? I think that the U.S. government, we don't have an earning problem or revenue problem. We get what, like $4.1 trillion a year in tax receipts. We have a spending problem. You know, obviously, Trump is trying to pass the big, beautiful bill that increases spending by, I think, $9 trillion over the next 10 years, while we're also simultaneously, what is it, $38 trillion in debt. And then he's like trying to say, hey, we're raising all this money from tariffs, even though the Supreme Court is going through legislation, I think in the next week or two, talking about whether this is constitutionally allowed for the president to sign an executive order to tariff these countries. And then basically he's trying to send out these checks to be like, oh, look at all this money we did from the tariffs. Obviously, he's trying to get goodwill to be like the people, like trying to get the goodwill of voters and people in general to say, oh, don't remove the tariffs, Supreme Court. Like, we want these. This is a good thing. We're getting stimmy checks. But at the end of the day, it's another way that we're printing more money in order to cause more inflation. I don't know if we have the chart, or I can look for it. They're pulling up like, what's my stimulus check worth now in Bitcoin? I mean, I remember back in, April of 2020, when they're sending out the $1,200 stimulus checks. I mean, I think it's well over, like, or it's close to $20,000 if you invested in Bitcoin back then. So really great investment if you did that. Obviously, if you're holding your sats, we advocate for here, buy Bitcoin, take it in self-custody, and hold it in self-custody yourself. Yeah, it's right there. I think Opti or Luke pulled it up for $21,000 for the initial investment of the $1,200 stimulus check that went out in April, mid-April of 2020. So yeah, just keep buying Bitcoin, hold in self-custody. But I do think, like I said, the Trump admin, they're trying to buy goodwill of people because we're a year in at this point, or a year of him being elected. And it just seems like a lot of promises not kept and met. Like, you know, people are complaining about inflation and the price and unaffordability. Obviously, we just had election day here in the United States, and we basically had a sweep from the Democrats. And obviously, if that's a sign to the Republicans, yeah, they had an overwhelming majority in 2024, but not to get political with it. In 2025, the governor of New Jersey is a Democrat now. The governor of Virginia, one is a Democrat. The mayor of New York City is a Democrat. And obviously, I think the central issue is kind of comes down to two issues. Is one is kind of, I hate to say it, but like the Israel and foreign war topics of Ukraine and Israel are like on the forefront of everyone's minds. We just had a 20-year unsuccessful campaign under both Democrats and Republicans in these foreign wars that have killed many Americans, or many Americans come back and are obviously dying to obviously drug overdoses or the fentanyl crisis or a lot of different things, while unaffordability is getting more and more expensive for the average day American and then just people abroad. And then that ties into the economy. Yeah, like the stock market and Bitcoin and all those have seen, you know, exponential growth. But at the end of the day, if your wages are not keeping up, and you don't have enough, like the poorest or middle or poor class don't have enough surplus income to invest in things, as things become more and more expensive, it's impossible to get in to buy a house. If energy is going up, if food prices are going up, these things become more and more difficult. Obviously, us as Bitcoiners see it as taking our fiat currency or taking our time and putting it into Bitcoin. Many people were trying to educate, obviously, to get on a Bitcoin standard, because then this becomes a message of hope and optimism, while keeping your time and your resources and your money to yourself. But I do think like we are in the minority. Like if you think like how many Bitcoiners there are worldwide, or even how many Bitcoiners there are in the US, we are the very, very small minority. Obviously, we're getting bigger voices as the Bitcoin price keeps going up, you know, and we're obviously right in the long term that we believe. But I think, yeah, it comes down to two main issues. It's obviously the foreign wars and the foreign entanglements, and then the price of everything and the economy getting more and more expensive for everything. So sorry for my long rant there, Luke. Take it away.
Never apologize, my friend. You mentioned lots of really interesting things, which is why I didn't want to cut you off. The first is this stock market, as you say. It's becoming more and more unaffordable day after day, week after week, month after month. And that's because, from a first principles basis, they have to print more money. There is no escaping it. We are living in a debt spiral. And I do want to talk about some of the interesting promises that maybe Trump has made and not followed through on yet later on in today's show, because there is a lot of meat on that bone, so to say. But I want to bring it back to the banks. So the first bank was Jamie Dimon, that just quietly started increasing its Bitcoin exposure in Q3 2025. Now, in the intro, I said there was another giant. Of course, we're talking about the $2 trillion giant, BNY Mellon. They just increased their Bitcoin holdings by a lazy 140% in Q3. This is really interesting. We're just starting to get all of this new information come out about the third quarter 2025. And this, Chris, kind of makes me thinking, right? We've got this government shutdown looming. We've got, for example, Michael Burry is short again. He's famously shorting this chart, which admittedly, it looks pretty crazy. This is the Palantir chart right now. And Michael Burry's gone short. The government is waffling and battling about it opening up or closing down again. And a lot of people are wondering, hang on a minute, you know, it's November, it's a year and a half post Bitcoin halving. What is happening with the price? But then behind closed doors, we're getting these SEC disclosures showing that the biggest banks, Jamie Dimon and the $2 trillion BNY Mellon, is silently increasing their exposure. These are just some of the things that really makes you go, what's happening here? Chris, what's your thoughts on BNY Mellon?
I think they're seeing the writing on the wall. I think obviously we've seen a run on the gold price. Gold has done very, very well over the last year and a half or so. I think BNY Mellon is trying to increase their Bitcoin holdings. We saw obviously a pullback. What the all-time high was 126, 127, 128-ish in that range. Obviously, we broke down below 100. It was funny following those on Polymarket or Cashy. You could see, like, was Bitcoin going to go under 100K? And it did briefly. It rebounded. We're now back at close to 103 right now. But I think, like, you don't buy things when they're hitting all-time highs. You either sell them, you know, or you have an opportunity to buy into them. Obviously, I don't believe that Bitcoin. I believe you keep buying, holding on, and obviously, you know, I don't sell my Bitcoin in general, but I could see that for other equities or stocks, or if you're retired and you need to sell things in order to live or fuel your lifestyle. But yeah, I mean, obviously gold's prices skyrocketing. I think you want hard assets. I think also this ties into Trump's other thing. So there's talks of, aside from the $2,000 stimulus checks, Luke, I don't know if you saw this, the 50-year mortgages. So when you're saying right now the average price or the average age of a home buyer here in the United States is 40 years old. That's the average price. Obviously, there's people that buy younger, higher, but first-time home buyers, the average age right now is 40 years old, which is not a good thing. I don't think that's a good thing by any means. But now if you're putting on top of this 50-year mortgages, so imagine you're a first-time home buyer, you get this 50-year mortgage, and you're 90 by the time you pay off and buy these things. Obviously, if you don't move or if you stay in that single home your whole life. But like, that's just really absurd. Also, if I'm being completely honest, as someone that owns a home, you know, while getting a home that you want to stay in for a long time for your family, I believe is a good investment or a good thing to have. At the end of the day, like, this 50-year mortgage, when you do the math on it, it does not look good. Like, it's not that much cheaper per month payment to get a 50-year mortgage. And normally the interest rates have to be higher because you think of the risk of the investment. Obviously, the banks or even the government, even though they're not the best investors at all by any means, unless your name's Nancy Pelosi or if you're in Congress or Senate, that's a story for another day. But yeah, like, obviously a 15-year mortgage, you're going to get a better interest rate than a 30-year, slightly higher. And then a 50-year mortgage, like, you're really batting up against inflation. So, you know, obviously the average interest rate right now of homes, I think, is like 6.5, 7. So assuming that if you're getting a 50-year mortgage, the interest rates are going to be 7, 7.5%, 8%. I don't know what it's going to come in if it actually goes through. Where like if you get a 15-year mortgage, it's probably 6 or sub 6, depending on your credit rating. So obviously, this is not something like that you as you don't want to loan money at a 50-year term and not get your money back, or like, hey, like Luke, I'll guarantee I'll loan you $100, and then if you guarantee that you give me $95 back, it's a great investment for you, but it's not a good investment for me. So that's obviously what happens when you print money. Like, you know, if you're buying US government bonds at 3%, at 4%, it's like, yeah, I guarantee I'll lend you money at $100 and you give me $103 back. But if you printed enough money that it only works, or the purchasing power of 98, 96, $97, that's not a good trade for me. Me as an investor lost money. That's why many people are fleeing to hard assets, such as homes, such as gold, such as Bitcoin, because they want to escape the fiat inflation. And if you're using fiat bonds, or a bond is a fiat instrument, obviously you're not returning on your capital that you're giving.
Yeah, exactly right. You mentioned something else, first home buyers. This is really interesting. When you said that statistic, I had to Google it. I was like, what? I need to fact check Chris here for a moment. The first home buyer is like nearly in their 40s. This is a backwards world, man. This is like, it's actually insane when you start thinking about it. Do the math. If you got a 50-year mortgage, somebody's going to be in that home paying off that debt when they're 88. That math just does not math.
Yeah. And then you think of it too, when you think of mortgages in general, obviously the interest is front loaded on the loan because the banks or the lenders want to be paid back first. So when you stretch it over a 50-year period, like if you're not in that home for more than, normally they say for a 30-year mortgage, if you're not in the home for at least a decade, it's really depending, you're obviously hoping that the equity or the value of the home goes up to cover the cost if you want to move before that 10-year mark. But if it doesn't go up, if the market goes down or corrects like 2008, you could be underwater in a home. So this happened to many people in the United States, unfortunately, in 2008. So they buy a house, let's just say $200,000. Let's just say the market corrects because of the 2008 financial crisis, down by 40, 50%, even spots in California and stuff. Some homes were down 60, 70%. Obviously, if you're an investor, that's a great time to buy in at that time. But if you're someone that's just an everyday person, you buy your home, you buy it at $200,000, it gets cut in half to $100,000, so 200,000 down to 100,000, but you only put down 20% down, 40%, you know, you've only been in the homes a few years. You obviously haven't had the equity to go up. You would now need to sell your house at a loss. So you sell it for $100,000. You need to close or go to the closing table or the closing, and you need to pay $60,000. So you're in this home for a few years. You're hoping to have equity or something in this house, but the $40,000 that you put as a down deposit is not there. And that's also on the back of people are needing to sell their homes because they're forced out, like they lost their job. They need to move to either find a new job or move in with family, but you basically have this home that you're being foreclosed on, and you need to come up with $60,000 at the closing. So you put $40,000 down a few years ago, you're working your everyday job. Unfortunately, whatever happened, maybe you lost your job. And then now you have this liability that you need to still pay every month. If not, if you sell the house, you sell it at a loss. So obviously that's what happened in 2008. I'm not advocating or saying that that's what's going to happen here, but also we don't have enough home supply on the market right now, or enough homes on the supply to meet the demand. With opening up these 50-year mortgages, now you're taking people. So you're not increasing the number of homes or the number of apartments or places to live. You're now adding all these 20 to 40-year-olds. You're trying to obviously pull them into the housing market. So you're adding more demand on top of a limited supply. Like obviously, if we're getting from the Austrian perspective or more of the free market Bitcoin perspective, you would want Trump to repeal restrictions or laws that are holding back home purchases or home building. So obviously, you want to rile up the economy, or you want to start the economy again, or make homes more affordable. You need to have people building. You know, obviously Trump's trope was going into the election was drill baby drill. Obviously he was talking about oil, but the same could be said for the construction industry. You want to peel back regulations or make things easier and faster and more efficient for companies to come in and build and, you know, expand on these homes. Because as of right now, you know, it's not affordable for the everyday American to get into homes. That's why the average age is 38, almost 40 years old. And you want to make it more affordable and easier for people to get in with homes. That's just my 2 cents on the situation.
Absolutely. It's again, a house is the most pivotal, biggest investment that the everyday person is going to make. And just the way I look at things from a 50,000 foot level is, look, if you're going to start pumping out 50-year mortgages, I don't. This is just my opinion. It could be wrong, Chris. I'd love for your thoughts on this topic. But 50-year mortgages just makes homes more expensive and puts them far out of the reach of the everyday person. So I just don't know how this is a good thing. For me, I pop my tinfoil hat conspiracy theorist hat on, and I just look at this, and it just looks like another convenient way to indebt the everyday person for even longer.
No, I completely agree. And if you think about it, if you're at BlackRock, if you're Blackstone, if you're some of these, investment companies or banks, if you know that this is going to go through with the Trump admin, if they're going to get the right to make 50-year mortgages basically backstopped by the U.S. government through Fannie Mae and Freddie Mac, if you and I are investors, Luke, the best thing that I would do if I was one of these large investment banks is, I know that more people are going to be able to afford homes. So I'm going to scoop up even more homes than they already have. So, show me the incentives and I'll show you the outcomes. Not only will more people try and buy homes in order to hold on to them for a year, 2 years, 5 years, whatever it may be, to flip them to make a ton of money because, more participants are coming in because they're going to get approved for these 50-year mortgages. So ultimately, I kind of completely disagree Trump here. And I know, Trump is obviously a historic real estate investor. I just don't understand how he's missing the forest from the trees here, not understanding how this is going to only make homes more expensive and even less people are going to be able to get into the already limited supply of homes we have here in the United States.
Exactly. Now, while we're talking about the banks and the housing market drama we're watching right now, is let's not forget what's kind of happened earlier in the year. Freddie Mac and Fannie Mae, the Federal Housing Finance Agency, directed these institutions to begin considering accepting Bitcoin as collateral for a down payment on mortgages. Now, obviously, this would make buying a home a lot more easy. As someone who is right now trying to buy a shitcoin, a home, without selling my Bitcoin, I can tell you right now, it's difficult. It's not easy. But I think moves like this, regulations like this being talked about in America, is again, we want to show you guys both sides of the argument today. This is a positive. Maybe, again, I could be missing something. There's also a conspiratorial angle to this story, Chris. But if we're at least normalizing the idea of using Bitcoin as a down payment to get a mortgage, that obviously, on the flip side of the argument, this is potentially going to be something that maybe helps the everyday person get into the housing market. Chris, am I missing something there? What's your thoughts on that?
No, I think there's a couple companies. There's Hoseki that comes to mind. They're a company that basically, if you're a Bitcoiner that doesn't want to sell your Bitcoin, but obviously banks nowadays, maybe this has changed since the Trump admin's gotten in, but I don't think so. Like, obviously, if you have a ton of Bitcoin, you don't have much fiat cash, and you're doing Bitcoin jobs, you're getting paid in Bitcoin and stuff. They don't see that as an asset. I think right now the rules are that you need to sell your Bitcoin into cash and then leave it in a bank for up to 30 days to count as a down deposit or, even as paying on a home. And then even then, I'm sure you're going to get a laundry list of questions of saying, where did this money come from? Where did this large sum of money that you came out of nowhere? If you're trying to buy a $500,000 house and you want to put 20% down, that's $100K. So if you don't want to sell your Bitcoin, I know Hoseki basically says like they do an attestation of your assets, meaning that they basically take your assets. They say, we verified on chain. They've done a signed message saying, this is my Bitcoin. I hold this and I'm willing to use this as assets. And they basically vouch and they give this nice letter saying like, hey, this is assets that this guy owns, and he wants to use this in order for paying for a down payment for the house. I'm drawing a blank on the other company that basically does Bitcoin-backed mortgages. So basically you put up a down payment of cash, you put up a little bit of Bitcoin as well, and basically it helps you adjust your interest rates on this. And it's kind of a cool concept. I'm drawing a complete blank on it. But to your point, if you want to put your tinfoil hat on, if you're opening this up to other crypto assets, I think a lot of people are going to get caught off sides. If you bought X, Y, and Z coin and, you're like, oh, this is such a great investment. It's gone up a little bit and then it tanks. Well, that's something that's tied to your home. And like the last thing you want to do is like forfeit your home because of your cryptocurrency value.
Exactly. And again, what do we always say about Bitcoin? You buy Bitcoin and you never sell it. It's the simple rules about Bitcoin. And this is kind of what we're seeing, back to what we were talking about earlier with these large institutions. Love this chart. Again, shout out to everybody making these really cool charts on Twitter. But this shows on the left, again, it's going to be a little bit tough for you guys to read, but this has some of the largest institutions who, again, offer us the mortgages, Chris. This is, again, why I like to watch what these banks are doing. But you can see JP Morgan Chase, Simplify Asset Management. You can see some massive asset managers and banks on this list. And the trend is pretty clear. A lot of these guys are increasing their holdings quarter after quarter. They don't care about the price. They're buying more Bitcoin, which is, again, I think this is the trend. This is the signal that I think a lot of you guys should be paying very, very, very close attention to. Now, we want to talk a little bit more about the banks later on in the show, Chris. But I think before we get to that, we wanted to give a big shout out to today's partner. That is, of course, the Bitcoin Well. We believe they are the best place to buy Bitcoin because they encourage you to self-custody your Bitcoin. Again, one of the biggest problems in Bitcoin today is the fact that we've got millions of coins sat on exchanges like Coinbase and Binance. Again, we love the Bitcoin Well because they're Bitcoin only. They encourage self-custody. And if you sign up with the Bitcoin Well by scanning that QR code on screen, you can go into the draw. You get a 1 in 3 chance to try to win 1 million sats when you sign up. So make sure you use that promo code simplybtc. And we're going to get into a little bit more of the bank stuff in a moment for you guys.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Absolutely get your hands on some titanium plates from StampSeed. Now, Chris, I do want to talk a little bit more about the banks before we get, I don't want to say controversial, but I want to touch on a couple of touchy topics in the Bitcoin space. Oh, you're in. Okay. Well, that was easy. I didn't have to twist your arm too much. Now, I wanted to talk a little bit more about the banks because, again, it's not just Jamie Dimon. It's not just JP Morgan. We've got other huge banks. SOFI Bank, again, a massive bank. Now, again, I think the end game here is kind of this article that we shared earlier. I think eventually a lot of the banks who offer us the mortgages, they're going to be custodying Bitcoin in the long run. I just don't see how things take a different pivot or a different direction, which is, again, long-term, why I'm incredibly bullish on Bitcoin. And I just think all these dominoes we continue to see, it's just more confirmation that, you know, these big banks, they're going to be forced to do it. Again, this headline kind of sums it up nicely. JP Morgan quietly lands 2 million share position in a Bitcoin company. Again, this is all happening while most people are just super focused, hyper focused on the price. Again, here's another really cool chart. Shout out to Sani. This is looking at the Bitcoin ETF's top holders. So who holds the BlackRock Bitcoin ETF or the Fidelity ETF? Have a look at the names: Millennium Management, Jane Street Group, Goldman Sachs. These are all huge banks. Morgan Stanley, BlackRock. This is just, Chris, I want your thoughts. So what are your thoughts on some of these biggest banks quietly just buying up massive stakes in these ETFs?
I think that they think they're buying into Bitcoin, but maybe this is my tinfoil hat and being a little conspiratorial. I think that a lot of them don't understand the risk. So they think they're getting Bitcoin. They think they're getting Bitcoin exposure. They may be getting Bitcoin and Bitcoin exposure, obviously, to the price through these vehicles, these ETFs. But I think at the end of the day, we need to practice what we preach here. Run your own node, buy your Bitcoin, take it into self-custody yourself. Because I think in the long run, like right now, obviously we could say they're at parity, or, oh, there's even more convenience because we hear all these stories or all this FUD. Luke, you hear it all the time on Twitter. People like, oh, I lost my Bitcoin, or, oh, I got social engineered, or, oh, I got hacked. Even people like Mark Cuban, remember like a year and a half ago when he said he got this email or text from Google, and then like basically they got into all his accounts and stuff. And it's like, yeah, this guy's a billionaire. This guy's supposed to be like the brightest of the bright, such a great investor, so smart on Shark Tank. And he even got fleeced by the social engineering. So it just goes like to show, like, stay calm, don't act rationally, do not enter your seed words or private key into anything electronic ever. Obviously hold your own Bitcoin wallet, like using like one of our sponsors like BitKey and stuff like that. But at the end of the day, what you want to do is you want to self-custody your Bitcoin. So you want to hold it yourself. And I think that risk parity or that premium on spot Bitcoin versus ETFs or other assets or all these treasury companies is going to be very apparent in 10, 20, or 30 years from now, when people are like, no, I don't want you to pledge your stock ticker for the asset. Like, I want to hold the true Bitcoin. It's kind of the same thing with gold. It's like, you'd much rather have gold, the asset, than gold, the stock ticker, versus a company that pays for equipment to do gold mining. Like, it's like different like levels of risk. And I think a lot of people think that they're the same, or even they say the ETFs, they kind of flood it saying, oh, it's easier. I buy it there and I don't have to worry about any other risks. I don't think that's true. Obviously, we've talked about all the time, the 6102 attack, and things like that. Like, obviously self-custodying your Bitcoin, there's more quote unquote risk, or there's more responsibility that comes with that. But at the end of the day, I think that's the much, much better path. And I think a lot of these institutions think that they're not as much risk, but I think you want to be a company that, I wouldn't say you want to be the one that custodies Bitcoin, because there's risk in that if you own it for other clients, but they're in a much better position custodying it, like a Coinbase or like a Bitwise ETF that custodies their own Bitcoin, than people that are buying the Bitwise ETF or the IBIT ETF and thinking that they own the Bitcoin. But that's just my 2 cents.
Yeah, I think as we see, more options, more solutions come into the space, I think a lot of people are going to get their hands on Bitcoin in a lot easier way. So here we go. SOFI rolls out crypto trading for retail customers. I kind of saw this news this morning. I was like, okay, SOFI, another bank getting into Bitcoin. I didn't realize they had 12 million customers. That's kind of crazy. 12 million people can now get direct access to Bitcoin, which is, again, just another sign of the times here. More and more of these banks. It's nearly like, when we start looking at the numbers, I believe more than 50% of the hedge funds around the world are also dabbling in Bitcoin and, month after month, increasing their exposure. You look at some of the largest asset managers around the world, BlackRock, Fidelity. There's very few, except for our vanguards, that haven't really rolled out Bitcoin yet. So I think this is just kind of this is the step that I think we all should be paying attention to. There's some great comments in the chat. Traders be trading. A lot of people are very focused on the chart of Bitcoin, because I think it's doing some things that we haven't really seen do before. Like, normally, a year and a half, we kind of alluded to this earlier, Bitcoin's typically topped, at this stage, 12 to 18 months after a halving. Right now, we're in November, actually. We're November 11th, and we haven't even seen a bull run. Maybe a slight pivot, an unplanned pivot. Chris, what are your thoughts on the 4-year cycle, and what are your thoughts on the past 12 to 18 months?
Yeah, I think, I don't know if the cycles are dead. I've been a big cycle guy myself. I do think that it's true, but when you bring in institutional investors, when you have the president of the United States mentioning it, and like, it's a big part of, I think, why he got in the office, I think that, it changes the dynamics of what it can be. Luke, I actually have a question for you here. So this is kind of throwing it back in your direction. So obviously when the ETFs launched in, what is that, January of 2024, it was basically like a lot of times they're suggesting 0.25%, 0.5%, up to 1%. Now they've slowly raised their estimates of like, hey, you can go anywhere from 2 to 5%, let's just say 5% being, very aggressive in terms of institutions. But let's just say we go on a true bull run, or we have like the Bitcoin price 2x's over the next 12 to 18 months, let's just say, hypothetically. Do you think that we always have downward pressure on the Bitcoin price and it's kind of narrowed the cycles, obviously? Because let's just say you're an institutional investor, you put 5%, you listen to the guidance, and you say, hey, I'm more I'm more willing to take risk. I put 5%, but then all of a sudden it doubles and it's now 10% of my position, or, around 10% of my position with Bitcoin doubling so fast. Maybe the market doesn't go as quick with that. So, it's 10% or near that 10% mark. Do you think that the institutions rebalance at that point down to, hey, we're going to pull it back down to 5%, or we're going to pull it to 7%. Do you think that causes downward pressure, that we don't get the high highs, but we also don't get the low lows because of this? So that's my pitch to you, Luke.
Yeah, it's a really interesting question. If straight off the top of my big noggin, I'm probably going to take a stab and say, like, firstly, I don't think anybody can model the price of Bitcoin. We're going to talk about this later. But I think it's really difficult to say, okay, we know what's going to happen, because British Hodl makes a really good point. We've got 3 data points that show that we're seeing like diminishing returns, and Bitcoin has these ramp ups and it has a crash. Now, obviously, it's fair to say that until Bitcoin does something different, we have to just assume what happened previously is probably going to repeat. That argument, it's not something you can just dismiss unless you can point to something on the chart or in the data and the fundamentals and say something has changed. Now, what is Bitcoin? It's money. Its price is driven by supply and demand. Now, to answer your question, we've got a completely different source of demand in the market today. We got institutions, we got billionaires, we got hedge funds. Now, it is true to your question that some of these hedge funds and banks are probably going to be fiat maxis. They're probably going to trim, they're probably going to sell. And, I think it's really tough to know whether that is going to dampen the upside and the downside. What I think is interesting, that for every lettuce-handed institution we see, you also see a new Michael Saylor pop up. So it's not just lonely old Michael Saylor with 600,000 coins who stepped into the market and doesn't appear to be selling, but you now have got other institutions like BlackRock. So BlackRock holds over 800,000 coins. That's 4% of the supply. Michael's got 3% of the supply. And both of those entities, again, BlackRock holds the Bitcoin for a lot of individuals. I get that argument. But even in these 20, 30, 40% corrections we've seen in this bull run in the price of Bitcoin, it's not like BlackRock is dumping 25% of the Bitcoin under custody. It's seen very little outflows and drawdowns in these bull runs. So I think, again, price is set at the margin. My mental model for Bitcoin is volatility is going to actually rise from here. I don't know when that's going to happen. I'm not selling everybody a power law model to trade and multiply their Bitcoins like the creator tweets about all the time. I don't know what's going to come. I think it's peak hubris to say that we can use the past 16 years of data and extrapolate that out forwards. But I think volatility will increase. And I think the more that these institutions come into the market and the smaller that the float is of Bitcoin. So this is the Bitcoin on exchanges. This is what actually dictates price. Again, price is set at the margins. The smaller that gets, the more unsure I am of what's going to happen. Again, I'm not ruling out a 90% bear market. I think it could still happen. There's even an argument to be had that maybe the biggest banks who are in the space right now might, again, just speculating, but maybe it's in their best wishes to orchestrate a crash like that. There's a lot of really interesting theories about what happens with that flash crash about 31 days ago and all of the shenanigans happening on Binance and certain exchanges, and obviously CZ getting pardoned by Trump. What happened? Was there an agreement or a deal struck there? I don't know. But I think the smaller that the number of Bitcoin on exchanges gets, I might pull up my favorite chart, I think the more unpredictable the price will get. So I don't think I answered your question there, Chris. But for me, I think most people think that Bitcoin is getting more predictable. They're saying, look, diminishing returns, power law. We have this, what do they call it now? Power curve channel. There's a lot of nonsense being talked about. I actually think Bitcoin's getting more unpredictable. That's not a popular take. I've had the same opinion for 4 years. And I just think the more that this chart drops, the less Bitcoin on exchanges there is. I think the less ability there is for these big exchanges to play paper games and suppression games. I think we're going to see Bitcoin's true price emerge when this float gets smaller and smaller. Again, hey, maybe I'm wrong. Maybe Bitcoin's true price is $150,000 and the power law is correct. I don't know, but I'd love to pose the same question to you, Chris. What do you think about the institutions getting into the space? Will the pumps be as pumpy as they were in 2013 or 2017? And the same to the downside. What do you think? Has anything changed?
I don't know. I mean, I do think it you're obviously you set a floor because there's buyers at lower prices when it goes lower. But I do think like as you get to the higher numbers, they're selling because they're like fiat maxis at the end of the day. I think in the long run, it's still going up and to the right, but I just think it hampers the volatile swings that we got of 21, 2017, 2013, and the previous eras. To your point though, on this chart though, price on all assets is set at the margin, meaning that like as the supply dwindles down, you can get these massive spikes up or massive drawbacks, as the asset is becoming smaller and smaller in terms of the viable amount of supply on the market. So I do think obviously if it starts ripping to the upside, people obviously sell their asset to, as it rips. But I do think as it's showing Bitcoin on exchanges getting smaller and smaller, that's only a good thing for the plebs and people that are stacking humbly.
Yeah, and I mean that's essentially what this channel is all about: buying Bitcoin, understanding Bitcoin, and understanding why you should take self-custody. So again, let's put that caveat out there before we put our little chart boy hats on, Chris, because we're talking about cycles. I want to talk about this chart. Again, this is the chart that a lot of people right now are thinking about. Every single time we see a halving, which is in the blue lines, Bitcoin's typically seen a parabolic rise after it, but we saw the halving well over a year ago now, and Bitcoin's behaving a little bit differently. I think if I put this in the monthly, it might be a little bit clearer to see, but this is why a lot of people are now beginning to ask the question, what is happening? Is Bitcoin different? I've seen some Bitcoiners draw some funny lines on a chart. They're not doing TA, they're just saying, look, this is kind of strange that Bitcoin's just stair-stepping higher in this very predictable fashion. It's moving up 50%, having a 20% pullback. It's very different to the days of 2020 where Bitcoin saw a 20x in 9 months like we did see. So again, like right now, my mental model is Bitcoin is becoming more unpredictable as time goes on. And I just think Bitcoin's total addressable market cap it's so much bigger than most people think. So I just think just when Bitcoin looks as if it's lower volatility, it's easier to predict, institutions are here, volatility will be damped. When I start seeing those narratives, that's when I start bracing myself for surprises, because this is what all markets do. This isn't just a Bitcoin thing, but all markets will punish the consensus opinion. All markets will surprise everybody. And right now, the consensus opinion I see is, diminishing returns, power law, power curve, all hail the PhDs and the experts in the space. They can predict everything perfectly. And I'm just cognizant of those narratives. I'm just cautioning people. Who knows? The power law could hold for the next 4 years. Absolutely, it could hold. There's a 10 or 20% chance that could happen. I'm just more worried about the next thing. What could happen next? That's just my thoughts on the charts there, Chris.
Yeah, no, I agree.
Okay, so we got some more interesting news as well. Again, we're talking about the banks a lot today. You mentioned it earlier, Chris. A lot of these institutions are talking about the optimal allocation to Bitcoin. We've seen some interesting things come out surrounding BlackRock over the years. BlackRock have said a 1 to 2% allocation to Bitcoin is fine. I'm more interested in this 2023 report that I believe they originally published for their insider clients a little while ago here, because they ran a study between 2011 and 2021. And their analysts said, look, the optimal allocation to Bitcoin over those 10 years was actually 84.9%. And that's pretty wild coming out about BlackRock. Who knows? Maybe they came out and said, look, let's check ourselves here. Let's be conservative publicly and restate that, oh, just 1 to 2% is reasonable. Also, that kind of answers that loop that you brought up earlier, Chris. What happens to these allocations? Do they rise in a bull run? Do they shrink in a bull run? I'm not sure, but for me, my mental model is I'm always questioning what these banks are saying publicly, and I'm watching what they're doing privately, because this report where they said, look, 84.9% Bitcoin allocation, I believe this was originally a private report for their clients and eventually got leaked publicly, which really makes you think, hang on a minute. We all know that Jamie Dimon has been, how can I say this diplomatically on a live stream? He's been putting some water on our back and telling us it's raining for some time, publicly saying, look, I don't want to talk about Bitcoin. Satoshi Nakamoto might change the rules of Bitcoin, and one day he appears and goes, poof, there's more than 21 million coins, but privately he's buying. So that's kind of my thoughts on allocations, Chris. I think a lot of these institutions, if they're sane and if they're getting off zero and jumping to a 1%, 2%, 3% allocation publicly, my money is probably betting that they probably hold a lot more privately.
Yeah, it's like the inverse Kramer effect, or, watch what they do, not what they say. When Jim Cramer is saying sell, 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 it's probably a good time to buy. When he's saying to buy, it's probably a good time to sell.
Absolutely. Yeah, the inverse Kramer. I saw the inverse, not the inverse, but I saw the Nancy tracker recently because obviously she recently retired, and I forget the exact statistics, but she had a net worth of hundreds of millions of dollars, while supposedly only earning a wage of about 100,000 a year. It doesn't really make sense. The math just doesn't quite math. But I want to talk a little bit more about SOFI, Chris. Again, we're talking about the banks. We're tracking the banks today. We're watching them. I believe we've got a clip about SOFI on the national news we want to play.
Nice to see you, sir, in person.
Good to see you as well.
Okay, so what's going on here? This is a big deal.
Yeah, this morning,
a very big deal for you.
It is a very big deal. It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holes we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's now permissible for banks like SOFI to offer cryptocurrencies. So this morning we're launching, as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
So I was going to ask, are we just talking about 3 for now?
We'll expand well beyond 3. It'll be a pretty broad assortment. We try to differentiate on being fast, having broad selection, great prices, ease of use. So we'll try to give members, SOFI members, as much selection as they would like.
And what's the difference between going through you and going through Coinbase or going through Robinhood or somebody else?
Yeah, there's a couple of really big differences. First, we're a nationally chartered bank, which means we have the infrastructure, the processes, the financial conditions that provides the safeguards that a consumer would expect from a bank, which is going to allow us to scale responsibly. The second thing is, because we are a one-stop shop, you can do all your banking, checking, and savings at SOFI, your borrowing, and your investing, and now crypto. And one of the unique things about that is when you come to SOFI and fund your crypto investments, you'll fund them in a SOFI checking and savings account. That checking and savings account's deposits earn interest.
Say that again. You're going to fund it with crypto?
You're going to fund
your checking account.
You're going to fund your checking account with cash.
Okay.
And then when you buy Bitcoin or Solana or Ethereum, the money will come straight out of your checking and savings account. So when you're not putting cash to work, it's not sitting in an account that earns no interest, and it's not sitting in an account that's not insured. So the money will sit in an FDIC insured account. Up to $2 million is what we offer. And when you buy, it will instantly withdraw from that account and send it to the marketplace.
I think I saw a comment that sums up that clip. Because again, caveat, there was a lot of, let's call it what it is, shitcoining in that interview. Crypto this, crypto that. Again, we are Bitcoin and we're Bitcoin only. But I saw Buck52,000 in the chat said, never trust a guy in a quarter zip. Absolutely true. Never trust a guy in a quarter zip or 3/4 pants. And I think, again, jokes aside, I think this is, again, just another confirmation we've got another massive bank going on the national news, publicly advocating Bitcoin and, you know, embracing the quote unquote space. Again, I'm bearish on all the other stuff, incredibly bullish on Bitcoin, but this kind of de-risks it. So now a lot of these banks, billionaires, big boys and institutions who trust SoFi Bank and their reputation, they see this guy go on the news and start pumping Bitcoin. They're all forced to look at Bitcoin. And then back to your question earlier, Chris, reevaluate their 0% Bitcoin holding. And once you go from 0 to 1, it's so much easier to go from a 1% allocation to a 10% allocation.
Definitely. There's something there's very interesting that he said in there. He said, obviously, the FDIC insurance rates on savings and checkings accounts is $250,000 or $500,000. $250 for single people, $500,000 for married couples. But it's very interesting. He mentioned $2 million. So I'm like, and then he was saying, like, you take your checking account, you buy Bitcoin, you're insured up to $2 million. I mean, if that's true, that's awesome. You know, that's like almost like a 10x of, or like I guess an 8x of like de-risking, you know, if you're saying up to $2 million that you're insured, but I just don't know how they're insuring it, what the insurance entails. If you know, they send the Bitcoin to the wrong address, like you buy it in their account and they're still holding it for you. Like, am I insured for rug pull risk? Am I insured for hacking risk? Like, I don't know. And the government didn't come out with a new rule or law saying that they have to insure this or what it is. So very interesting. It's definitely something I want to dig into. Like you and I agree with, though, like a lot of shit coining in that statement and statements that he was saying. So I'd say, you know, obviously buy Bitcoin, self-custody it yourself. You're much better position than doing it through any bank.
Yeah, so I'm never trusting of rug pull risk. I like that one, Chris. Let's dive into that in a moment, just after the news break.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Okay, so before we get into our triggering conversation, Chris, I wanted to quickly dive into some more news that we saw come out this week. So again, we have a little bit more clarity on a draft of the crypto legislation bill. This has been something that's been on the table for a little while now. We can see the House passed its version of a bill to regulate the crypto industry in July. This is called the Digital Asset Market Clarity Act, or just Clarity for short. Since then, the Senate has been working on its own legislation. But now we got the Senate Banking Committee, led by the Republicans, has a draft that looks to allocate jurisdiction between the US Securities and Exchange Commission and the CFTC, as well as creating a new term for ancillary, that's a tongue twister, assets, to clarify which cryptocurrencies are not securities. Again, oh boy, I've got spicy takes on which is a security and which is not. I'll save those for a moment, Chris. What do you think about this bill? And again, this ongoing discussion about, what's a security, what's a cryptocurrency, what's a commodity? It's a long-standing debate in the space, but it looks as if it's about to get a little bit more spicy.
Yeah, I mean, in my opinion, the Howey test was invented in the 1920s, 1930s, and I think that's the long-standing rule of the law. I know many people in the crypto space, or even just in the tech sector, argue it's like, oh, well, we didn't have the internet back then. We didn't have all this technology that we've had back then. It's like, well, the law is still pretty clear, and I don't think there's a reason to change it. Like, I think it did its job, and it's doing a good job describing it. I think many of the people want to be the ability to fleece retail. I think that's immoral and wrong and arguably illegal. I know there hasn't been that many cases on it, but I do think it's illegal. And I think that they want to have their cake and eat it too. It's like, oh, we're a commodity in this sense, but in another time, it's like, oh, I want to pump my cryptocurrency and sell it as an equity to the market. Or have VCs, what is it they say? Time to profits or whatever. Basically, like, you can launch a crypto coin in 6 to 9 months. You're basically doubling your money, or, fleecing retail to get your money back and then some. So I think it's pretty black and white. A lot of people say there's a lot of gray to it, but I don't think so. But we'll see. I do think that whenever the government gets involved with anything, though, Republican, Democrat, Independent, doesn't matter. When the government puts more rules and restrictions, there's always I wouldn't say nefarious, because I wouldn't describe what's nefarious. What you can describe to idiocracy or idiocy, but I do think that they're going to add more rules and laws, and I don't think they're going to be beneficial to everyday users. I mean, even look at the unfortunate state of events of the Bitcoin fog case, the Mixer and Roman Sterling off. You look at the Ronin Dojo, or not Ronin Dojo. I'm drawing a freaking blank on what? Samurais. Thank you. Samurai. The Samurai developers that unfortunately pled guilty because it didn't look like it was going to rule in their favor. And it looks like they're getting the max sentence of 5 years, as well as they, I think, have to pay each individually $250,000, $500,000 on top of their business getting seized, which was close to $6.5 million. So the government basically got a free payday of close to $7.5 million, and they have to serve 5 years in jail. Obviously, I think many people in the Bitcoin industry and crypto industry at large are hopeful that President Trump can pardon them, like he did with CZ, like he did with Ross Ulbricht. But, I do think it's a long shot, and I hope that they don't have to be in jail for all 5 years. But we'll see. Yeah, like, while they're trying to say like Bitcoin's free, open source, and they're promoting all this, they're clamping down, the Biden administration carrying over even to the Trump administration of carrying down, or the DOJ carrying down these indictments and these cases. So I wish that was not the case, but that's the unfortunate reality.
Yeah, I mean, great point, Chris. I'm going to try to rein myself in so I don't get too triggered. But we've got all these states in America pushing out digital IDs and digital driver's licenses and all of these shenanigans. We've got CZ Binance, again, charitable description of CZ Binance. He's created a innovative crypto exchange. Not so charitable. Maybe he's pumping and dumping all sorts of different cryptos, and he's created a casino that's, let's just say, getting a lot of retail people fleeced. He gets a pardon, but people who are creating code that helps people get some financial privacy, they're getting the max sentence. Again, I'm Australian. If the accent doesn't give it away, I'm not an expert on the law and the judges and the judicial system in America, but that just doesn't pass the sniff test. That just shouldn't be happening if we have a Bitcoin and freedom-loving president. That's just my take. Who knows what's going to happen there? A quick other thought that I had on the SEC and the CFTC stuff was, I think you summed it up here, Chris, we've got a singular test that tells us what's a security and what's a not. It's how we test. But here, as we're having this debate over the CFTC and the SEC, we can see here, oh, the CFTC only has 543 full-time staff compared to the 4,200 at the SEC. And the posturing here, Chris, that I can see coming down the pipeline is, oh, we need more money. We need more money. We need to fleece the citizens some more because the CFTC has 543 people. But I think you concluded pretty accurately a moment ago. I don't think you need any employees. We have the Howey test. It's pretty clear that we got one commodity in the space and 20,000 LARPs.
Yeah.
That's what we got. Literal LARPs. Before I start talking about LARPs a little bit more, because we might be entering the controversial era of this show, I think we should give one more shout outs to our sponsors that keep us on the air, and then we're going to get a little bit more spicy with some charts, 4-year cycle discussions, and some power law discussions.
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
So Bitcoin is absolutely all about freedom. A lot of people say it's digital money, digital gold. A lot of people say that, oh, the power law confirms that it's digital gold because we have this perfect channel that can supposedly predict the Bitcoin price. Chris, I probably want your thoughts on the topic before mine because I could potentially get a little bit more unhinged. But what are your thoughts on this chart when you see it?
I mean, this is the power law chart, basically.
Yeah.
So I don't know. I think I learned in engineering school. I'll resort to my education and my engineering background. So in engineering, there is this great quote, and it basically goes, all charts are wrong. Some charts are useful. Most charts are dangerous. And I think that's a good sum up of like all charts, all rules, all like, different things like that. Do you know, you are familiar with the Challenger explosion that happened in the 80s, the NASA rocket that blew up and killed, I forget how many astronauts, like 10 or 11 astronauts. Yeah. So basically I'll give a simple explanation for everyone. So basically there was these O-rings that they used on the Challenger ship. And this is one of the first things that we learned in engineering school when I was a freshman in college. So basically they had this chart, and basically it showed the elasticity of these O-rings, these rubber O-rings, so like a 50-cent item on this. And it basically had the elasticity of them with a temperature curve. And so it had a band of like, upwards of 100, 110 degrees. And then it went all the way down to like 40 or 45 degrees. Well, it was unreasonably cold in Texas. I think it fell into like the mid 30s, like uncharacteristically cold. And basically, they assumed that it followed this straight line of like, okay, it becomes less elastic, becomes a little bit more brittle. But what they didn't know on the chart, because they didn't have the testing or the data for it, they just assumed that it followed this same curve. Well, what they didn't do when they did testing afterwards, after the Challenger explosion, it actually breaks. The chart breaks, meaning that it shows that the elasticity is too brittle and it causes it to break. So when the Challenger took off, these O-rings, like I said, they're 50-cent dollar max thing. They obviously exploded. And when they exploded, the air and the fuel combined and caused the explosion that blew up the Challenger. I greatly simplified that to try and not go into all the engineering of it. But basically, when you assume, you make an ass of you and me. And, in science, in mathematics, in anything, if you're taking a chart and you're taking it as fact or like the word, that's not the case. And I think it's even harder in economics when there's so many different factors of why an asset will move up and down. And so I do think that these charts are nice. They look cool. They're bullish. They pump you up. But I would not I would not keep my investing strategy or my loan strategy if I'm leveraging my Bitcoin or things like that off a chart. Like I said, people can fight and debate me and say that that's wrong or that's idiotic. But I just know what I've learned in my time in engineering. But I think it's a very bad take at doing it. Yeah, they're fun. They're fun to debate and talk about, but I wouldn't put my faith in something that's changing constantly. So I don't know. That's just my 2 cents. What are your thoughts, Luke?
Oh, I've got a lot of thoughts. Firstly, I love Bill's thoughts. Never assume from the wazoo. I actually love never assume. You make an ass out of you and me. I like that one a lot.
You've never heard that one? That's a good one.
It is a good one. For me, first principles, the power law doesn't make sense because the math doesn't math. So if you do the math, if you have a look at the power law, it's predicting $4 million Bitcoin by 2040. And again, big number. People say, 4 million by 2040. Yes, I want to believe that. That's bullish. That's 40 times higher than where we are right now. But the math doesn't pass the sniff test for me because when you do the maths, okay, that would be an $84 trillion market cap. There's $900 trillion of wealth in the world today. So assuming global wealth doesn't expand, that means Bitcoin is 9% of global assets. Again, that feels on the low side, but again, global wealth is going to expand a lot. Michael Saylor's got this really good chart that shows that he projects out global wealth by 2045. So Saylor thinks that there's going to be about 4,000 trillion. So that's $4 quadrillion of wealth in 2045. Now, if the power law is predicting, let's say, about $5 million Bitcoin by 2045, that means Bitcoin's $100 trillion market cap. And again, I trust Saylor's projections. I don't trust anyone or any model, but I think Saylor's projections are pretty directionally correct. He's run the numbers on each one of these asset classes. And in 2045, Bitcoin's 5 million based on the power law. That means it's $100 trillion. But the bond market would be $840 trillion. There would be $500 trillion of fiat money in the world, $850 trillion of equities. And if Bitcoin's 100 trillion, that means quick maths tells me that Bitcoin is 2.5% of global wealth in 2045, 37 years after it was introduced into the world. Now, I've done a full deep dive on my channel breaking down the maths, the history of monetary transitions, the history of technological adoption curves. All I'm going to tell you guys is 3% penetration after 37 years is one of the slowest technological adoption curves in human history. So for me, the math just doesn't math for the power law. It just doesn't. Are we really going to think that fiat currency is still going to be 5 times bigger than the Bitcoin market cap in 25 years from now or 20 years from now? Are bonds really such a good investment that they're going to be 8.4 times larger than the Bitcoin market cap, according to the power law? That's just my first principles kind of look at things. Technological revolutions, they happen in exponential waves. Monetary transitions happen in exponential waves. Every fiat currency has collapsed in human history. The average lifespan's 27 years. Do we really think, we're 50 years into this globally connected fiat system? Do we really think it's going to hold up for another 25 years? That's just many of the problems I have with the power law, Chris. I have even more. Do you have any comments on either one of those takes?
No, I think, I mean, to add, and then you don't know in the 2045 world, what's the average price of a home? Is it now $800,000 per home, $600,000 per home, $1.1 million per home? What's the, like you said, like bonds growing by that much? It's like, are they that great of an investment, but are they forcing that companies, like, do we become like a communist society where we basically all of us have to buy bond, like all companies have to buy bonds as a mandate? Yeah, I think there's a lot of assumptions baked in there. I just know that someone, I think, I forget who put up on the chat. It was like, I know Bitcoin's going to go up and down infinitely for all of time, or whatever it was, the quote. I thought that was hilarious.
Yeah, there's a lot of assumptions baked into it. For me, another even bigger assumption that I think is baked into it is the fact that we just assume fiat currency is going to hold. Again, the power law. So the power law, the Bitcoin price chart, it's already broken in like 20% of the world's populations. Like, for example, have a look at the Bitcoin price in Nigeria, not a power law for 220 million people. I have a whole tweet here breaking down all the countries where the power law has completely broken. Pakistan, 240 million people. Turkey, 85 million people. And my biggest problem with these charts is a lot of people in Nigeria might have sold Bitcoin at 60 million Nigerian nairas for a Bitcoin in 2023 because it started hitting, it's one of the top channels it's overbought, it's in the 3 standard deviations from the channel curve. I need to sell it because the PhD told me to. And now they sold at 60 million. It's at 120, 150 million Nigerian nairas for a Bitcoin. It's just, I could go on and on and on talking about the power law. Chris,
I'll add one thing. Are you familiar with the Weimar chart, the German marks from 1914 to 1922 or 23? It shows basically like it's kind of going along and it hockey sticks up, and it's German marks priced in ounces of gold. And I know Dylan LeClaire years ago, 2020, 2021, he posted this chart showing the changes. So the black line is the price of gold priced in German marks, and hockey sticks up at the end. And obviously they experience hyperinflation. Thank you, whoever pulled up this chart. So the red line is the percent change in gold. I did a calculation because I'm an insane person. So right before it hockey sticks up, the peak right in the red before it goes parabolic, if you sold your gold at that top, so before it goes hockey sticking up, if you sold your gold there, you still lost. And that's a local top, the percent change at a max. If you sold your gold there, you still lost 90% of your value in German marks, and you sold it at the next top before it peaked off, meaning that even if you sold there, if you had $1 million, $2 million, whatever amount of money, $100,000, your value went from 100,000, $1 million down 90%. So 100,000 to $10,000, $1 million to $100,000. And that is if you're a perfect trader. No one in the world's a perfect trader. So even if you sold like a little bit off that, you basically lost 99% of your wealth. So the ultimate trade, this shows that the ultimate trade was to hold your gold indefinitely, to never sell into it. Obviously you sell a little bit here and there to cover your expenses and stuff, but this chart is so perfect that it shows you never sell your gold. You never go into a fiat currency because you're only going to only have what fiat currency, what you're willing to lose. That's kind of what this chart shows to me. So obviously, you have expenses. People don't want to take Bitcoin for whatever reason. You have to pay them in fiat for your bills or whatever it may be in this just day and age. But that just shows you should always hold in the hard asset and not swap it into. Because even if you're a perfect trader, you lost 99% of your 90% of your value. If you're not a perfect trader, you lost 99 or more % of your value by trading it back and forth into different assets.
That's a brilliant point, dude. I love that you ran the maths.
I literally was doing all the lines and interpolating it using my engineering degree. But yeah, you lost 90% of your value if you traded the exact top. And that's perfect within the second, within the minute, with everything of the max top there.
And that's my biggest problem with these models. Again, I don't know anything for certain. All I know is that I think we're living in pretty unpredictable times. Monetary transitions, they happen in an exponential fashion. And there's a lot of deleted tweets out there from the Power Opinion crew telling you it's easy. Just sell your Bitcoin at the top of the channel, multiply your Bitcoins by buying it all back at the bottom of the channel. That kind of certainty and inability to allow anyone to challenge that narrative really worries me, especially when I've still, again, this is an invitation, still haven't heard a good argument as to why it's a good idea to assume that by 2045, Bitcoin's going to be worth 2% of global wealth 38 years after it's invented. Again, a controversial opinion. I think that's a failure. I don't think that's a success. And I'm far more bullish on Bitcoin than a $5 million price tag by 2045. I could probably talk about where I think Bitcoin's going to go in the future for another hour, but I won't bore you guys with that. Chris, I think we've covered a lot of ground today. I think this is a good place to wrap things up. Do you have any other final comments or anything you think we haven't mentioned today to the guys?
No, I think stay humble, stack sats, buy Bitcoin, take it in self-custody, run your own node, build a strong community, start families. That's my recommendation or advice to people.
Brilliant advice. I couldn't add anything else except for do not trade your Bitcoin. Simple as that. Guys, thank you so much for joining today. We might leave this one here and we will be back again tomorrow.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.